Okay, welcome everyone. We're here for Stop Losing, Start Trading. So this is a trading show where we showcase the Panoptic platform, but also show people how to trade options. Rosalie currently is traveling to ETH Denver, so she won't be able to join us. And instead, I have Steve here from the engineering team. So welcome, Steve. So how are you today?
Hey, I'm good. How are you?
Very good. Yeah. So, given the title of the show is that we're gonna roast this top trader portfolio, so we'll go over Steve's portfolio. So he's kind of been learning as well, along with Rosalie, how to trade options. We'll go over his portfolio, and then maybe set up a specific trade in a meme coin. And at the same time, given that we may have time, we'll go over again maybe another top portfolio and see how they're trading, so that we can use to the openness of the blockchain to our advantage. Now we can spy on people and see what they're doing. So when it's Steve, he has a doxed ENS name, so we know which account. But otherwise, we'll just go to the other ones. So again, eventful weekend, and I think given the big hack on Bybit, there hasn't been that much movement. So yeah, how do you feel about the market, Steve?
Yeah, I've been waiting for an ETH upward move really since like November. I'm a big believer that tech drives price. The best tech's going to win, and I think Ethereum's the best tech. And we've been stuck in this 2,600 price forever. Even on Friday, it looked like maybe we were finally getting it. We got to like 2,900, I think, and then the Bybit crash really pulled that back. So
I think they were an upward trend as well, because I think they were buying ETH to make it whole. But again, it's kind of red, but it's neutral to bullish. But yeah, the last 7 days and 24 hours as well, very choppy. So you're trading, you want to see the price going up. So how do you feel when you see this red choppy zone?
yeah, not awesome if I want to be a pretty passive trader, which is my profile. If I was willing to kind of like farm volatility and really try to catch these moves, like this is like opportunity, right? Every one of those movements is something I could get exposure to. But yeah, that's just not something I've bandwidth for. So, this is not great news for me.
Yeah, same thing with the past month. Again, someone sold maybe again early November, early February, but the past 3 weeks have been sideways. Whether it's even BTC, Solana, very sideways move. And again, I myself, I'm happy with this because I'm also always delta neutral. So whatever trades I set up here at the beginning is still true to my initial assumption. So this is very good. But again, one thing that is important to look at as well is not just the price move, but the volatility. Our friends at Volmex, again, will share their indices as well. But knowing volatility is also very important when you trade options. They have the Bitcoin and ETH volatility indices as well. I think Solana, but we'll go to the ETH one. And you have to realize that even though there is a choppy movement in terms of price action, again, since the beginning of the year, the IV has been somewhat active, and this is also one cool signal that IV dictates something that is not always obvious in the price action. And I guess maybe the most obvious one is that the election event with Trump being elected decreased the IV because there were some uncertainties. Now people say, hey, whether it's bullish or bearish, everybody agrees that okay, the price should go this way. So you see a decrease. And since then it's going up or down, and you have these spikes. So this is also where you have to pay attention to. There has been a kind of low trough earlier last week, and the past few weeks are still past few days are still very active. But when you trade volatility, the vol signal is actually pretty useful as well. So even though we seem to be going stable, it's been kind of moving quite a bit. Again, the lowest vol that we had given the Trump election, which was no more certainty. In that case, it was maybe a bit more bullish. We're almost, I mean, back to that level. But the IV as well has been going pretty much, again, kind of actively going up and down. It doesn't seem that much, but these moves can be something people take advantage of. So again, as a new trader, we don't want, again, you, Steve, I don't know if you look at these charts, but then when we say IV is spiking, is your first instinct to get out of the way and leave, or double down, or kind of how do you signal to these volatility signals? How do you listen to volatility signals?
Yeah. I mean, yeah, like I said, to date, I have felt like, okay, if I want to take advantage of volatility, that requires really active trading, and that might not be true. But that's kind of my uninformed take at the moment. And so when I hear that, I think, okay, well, it sounds like I might have some pain in the interim, right? It could be volatility in one direction or another. And so that's usually my reaction, but I'm also planning on holding for a while, right? So okay, IV might spike, but IV will settle down eventually, and it's not really cause for me to leave.
Exactly. And we can look, I don't know how far back they yet. Since 2023, these are the big trends. But the day-to-day IV spikes, if you want the changes in price, can be pretty violent. But if you are trading options, there's always these maybe larger trends. For some reason, it was on the way down quite a bit, 2022, 2023. Now it's a lot more choppy. You expect the IV to be between 60 and 80. And remember, this is IV is kind of the big normalizer. If you look at the IV of Ethereum, it's about 68%. The IV of a stock like Tesla is also 60, 70, 80% perhaps. So the volatility of how you trade ETH and how you trade Tesla means it's very similar because that one number encapsulates a lot of kind of subtle details. BTC could be also 50, 60. Could be again an Amazon or a tech stock. If you go to the meme coin, this is 100%, 200% IV. You have some stocks like that. I mean, whenever there's maybe the Reddit stock has had a big run, this one also trades in a weird way similar to a meme stock, a meme coin, not just because it's going up or down, but the volatility is kind of the same. So you should trade the same way. So at the end of the day, as long as the markets are liquid, I don't want you to trade all your coins on meme coins or even the Reddit stock. But everything we see in TradFi is linked to that IV or the volatility. And whether it's a meme coin or meme stock or something a bit more boring like, I don't know, IBM, there's always a trade for that. So I will try to also kind of discuss and give my perspective on the charts for IV. Bitcoin also is now maybe getting a bit more serious with suits buying the ETF, and it's on a different trajectory for sure compared to ETH. So you still had this huge drop in November. It's been stable. It's going down now. So again, the top was 115. I don't know how much it was, but since the top, it's been going down. So it's just something quite now 50% IV. This is maybe again a mildly boring stock. So I don't know. Still more active than S&P 500, but not too much higher. So I don't know.
How much of that do you think the regulatory news has to do with? Because you have David Saxon, who's a pretty big Bitcoin fan, but we don't really know his views on ETH. Is that kind of why Bitcoin is kind of leveling out below ETH on
Yeah,
volatility?
I think so. And then the price action is reflecting that IV. So even though IV is going down, the price could still move, but it's going to move less violently. So that means that there might be more sophisticated players. There might be kind of these more broader trends that can say, we think Bitcoin should be part of the US Reserve. So there's one kind of uncertainty that says, okay, this could be a good bet. So let's buy. And that means everyone moves the same way. But here, yes, the fact that it's getting more maybe, serious, a little bit more controlled. There's going to be some level of kind of, again, certainty, which is what drives the volatility down. And we've seen this, of course, as you say, with Bitcoin and even David Sachs, but not as much with ETH. So that could explain this. I'm not too much into the price of Solana, but let's have a look because there's been some. Is this Solana? Yeah, there's been some certainly interesting times with the Libra and then the meme coins. So I can imagine that this is high, 94%, and this might be the spikes. Yeah, not even actually. I don't know what happened in January, but this is also maybe a sign of less mature markets, less mature participants. A 25 million buy on Solana does move the price quite a bit more than BTC, which again won't blip. So BTC, ETH, Solana all have different measures of volatility. I mean, I'm a bit surprised that we're not at the top, given that again, maybe with Solana, people it's gonna go down on a trend when people are a little bit less willing to trade, willing to bet on the upside or downside, just willing to hold. There's no trading, so there's less activity. So that might be a little bit what we see. So again, it's reading the charts, but the volatility charts, which is quite different than reading the price charts. So that's interesting. So again, something that people should look at as well is the IV, how it trades. So maybe next step, let's go to the trading app too. So we've pushed this update last week. Again, the landing page now has a slightly more dynamic content that people can look. So either the homepage or the Panoptic page here We want to make it so that you can still learn a little bit about what people are trading by showing the recent trades, how Panoptic works. We have a few things cooking. You can look at the portfolio, but also Grow app, which has come live today, will be linked here. You can migrate from Uniswap, options vaults. So that's a somewhat new landing page, a little bit more dynamic, a little bit more information. So again, maybe on your side, Steve, Steve, you're on the dev team. So
Mhm.
so yeah, how do you feel like people should look at this type of page when they land on Panoptic?
Yeah, I mean, it's definitely the goal is to get people excited about what Panoptic can do and really explain it, for any level of crypto user. And so, it's nice that we have this content right on the landing page of like, hey, here's where your premium comes from. It's actually a Uniswap position. And so I'm hoping this makes it easier for people to kind of get a hang of what's going on. And definitely like the recent trades are really excited to look through. I don't know how familiar people are with these payoff curves, but if you're looking for inspiration of, hey, like, like I know what options are. I've heard of a buy and put, but like, what does that actually mean for my profitability? Like, this is a pretty nice way to visualize it. So I'm hoping people can kind of look through and kind of see, oh, I'm bullish on this asset. Like, people seem to be buying that. Maybe it's the time.
Yeah, and again, I think the goal of Panoptic is to show this in a way that is more accessible, a lot more visual. So here it's easy to see that the price is going left to right, but here this is a bullish strategy where the price goes up. This is might be neutral where you lose on both sides but stays neutral. So this is also something for people, yeah, that have no idea as oh yeah, and sometimes a bit more complex, but you can use this as trading ideas. Now we'll go again to the bottom point. There's a leaderboard here. We'll look at Steve's existing trades and see how they are performing, and maybe go over some of the things to look for when you trade options. And we'll also maybe set up a new trade. So again, you're very brave to dox yourself. So Steve, one of your accounts, maybe more, but we can easily go from that Pips leaderboard. Again, people are earning points mostly for setting options, buying options, and depositing. You're kind of high up, top 30 for sure. You can click on your name and see your portfolio. So currently, yeah, if you were to land on this page, and we'll try to do the same exercise with Rosalie, what do you see? How what grabs your attention?
So I see a portfolio like net liquidation value graph right there. Reminds me what I see on Robinhood, and it looks like I've actually had a pretty wavy period recently. It would be nice if I kind of had the scale of what this meant, but my initial reaction is like it looks like there's some movement up and down, but overall I'm pretty neutral, which lines up with what I was expecting because
Yeah,
I've held this
some
position. Oh, go ahead. Yeah.
yeah, some positive P&L overall. So give there's the yeah, which is green. You'd like to see this for sure, but yeah,
Yeah, definitely, but only slightly green. I'd like to be more green than this, but it's definitely something, especially for like I happen to know. Okay, well, I deposited my ETH and then swapped half of that into USDC, and I was gonna hold the ETH anyways, right? So really, the P&L I'm making here is actually gravy on top of what I would have been doing otherwise.
yeah. So $150. We can look at your position, but your portfolio as well. So since this is one position, and you say this is just me, maybe diversifying your yield, you have a buying power which is manageable. I don't think you'll get liquidated as well because of the construct, but good buying power in terms of what you get. You still have your PLP returns. You've earned something on the. This is maybe misleading, but you've created a position that converted some of your ETH to USDC. In that case, we see that position. It's a short put, setting a put option, 1% up, but then you have the bulk of your. I mean, all your P&L comes from that. The stream, yeah, which is how much you get paid for that position as well, is interesting. It's higher than the open P&L, so that tells me that directionally you might have been wrong, but you're still in the green. So we can click on details or the actual position, and this is going to show us the whole kind of P&L chart. So here, yeah, what was that trade? Maybe can you tell us about why you entered it and what does it look like now?
Yeah. I mean, so steps to making a trade, right? Step one is figure out an asset you have an opinion on. And I think that ETH, well, I guess, okay, if you're delta neutral, you don't have to have an opinion, of course. But if you're like me and you want to get some delta, then you have to have an opinion. And my opinion, right, is that ETH and its ecosystem of L2s is the best tech to build on. And so that's going to drive demand for gas fees, which will move the price up over time. That's my long-term thought. And then the second step is, okay, pick a time scale, right? And do I think the price will move up this month? Like that's something I have less conviction on, you know. But it sounds reasonable, especially since every other asset has already moved up. So maybe there's
Mhm.
just like dry powder waiting to push ETH up. That was the thesis. I opened this position maybe like 20 days ago or so now, and
Yep.
yeah, I'm slightly wrong so far. I think we're down 1% from where I bought.
Yeah, and again, the initial price was about 2,700. We've seen moves back and forth, and now maybe it's on the lower side. But you were in range the whole time. You were maybe wrong a little bit, but I'm not worried at all because you're still well within the range. So we can click, and if we hover, as long as the price doesn't go below 2350, you're still in range and you're still kind of earning, which is totally fine. And being wrong directionally, if you scale back, it's not a huge move compared to the whole scale. So, like I would say, Rosalie, very often, just wait and see. This is actually working for you in a few ways. Even though the price went down a little bit, you're earning fees. And that meant that your break even points now is still lower than your current price. So you're in the positive zone. It's a positive delta. Price went down, but the fees more than compensate for that. So even if the price were to go to 2,600, you'll still be in the green. And the premium always going up is what you'd like to see. So this is again a good trade because it hasn't gone catastrophically wrong. It's just been kind of maybe choppy, but it's not something that as a user I would recommend you doing anything else besides waiting. And as the price goes down, you can imagine that the losses, if it does leave your range, is when you have to be kind of paying more attention. We haven't seen a huge reversal in either Rosalie's or the internal accounts trade. In your case, it's not. But if the price were to go to 2,500, 2,400, when you leave the range, this is when you want to kind of readjust. So still in range. Had the price going down, if you were to leave now, if the price were to go and leave your range, you would lose a little bit, $1,000 thereabouts. But the key point is that this position is still pretty large. It's almost 12k worth of notional value, and you only had to put 4,200 of collateral, so you have a 3x leverage built into that position. That means you earn fees at 3 times the rate than you would do in Uniswap. Of course, the risks are 3 times as big if the price goes down, but you want to be in that position where you don't have you have this kind of extra. If you're right directionally, you don't mind about the losses. So if you're right directionally and you're good in your conviction, going up is kind of what you expect. So again, you can make $1,500. It does go back to maybe 4,000, which was earlier this year, plus the fees that would accumulate. So again, this is a very good bet, a good trade for a bullish trader like yourself on a liquid underlying like ETH USDC. In that case, there's one thing, and again, one thing that is less than optimal, which is the spread multiplier. And yeah, here it's 1.x 1.00. So can you maybe remind me and the audience what's your understanding of the spread multiplier here?
Yeah. My understanding is that, you know, there's buyers and sellers in Panoptic, right? People will be selling puts and buying puts. And the buyers of those puts, they're removing your Uniswap LP position. And in return for doing that, they are paying you a multiple of the Uniswap fees.
Yeah. So in that case, we can spy on who else is in that strike. You are the biggest seller, so that's fine. Everyone else is lower size, but no one is buying this. So for a buyer, you can buy this up to 30k worth of liquidity. It's still sizable. Again, 10 ETH worth of protection if you want to buy this. Currently, you can do 2 5 ETH and not pay too much more, but that's a cheap strike to trade. So again, maybe a message if you're bullish, bearish on ETH, that is one strike that is untouched, meaning it's only sold. If you're buying, you will pay 1.1, 1.2, 1.01, 1.05. You'll pay not that much more. So ideally, you'd like to see a little bit more buying activity. Maybe there was someone that bought, but they closed their position. But for now, it's still kind of in a good place in terms of earning fees. If you have a multiplier of 1.2, 1.3, 1.5, it would have been even better. But for now, it's just wait and see. Someone can certainly recognize that cheap option to buy. And if you're on the buy side and it's cheap, you kind of better off in terms of the long term outlook. So, but yeah, I would say in that case, keep waiting. This is a 1 month expiry, so on average, every 30-ish days, you could expect the price to leave the range, up or down. We're still in that range. We can even reset the clock and say we can wait another month. It's still so close from the initial point that you can still maintain the same assumption. And yeah, so good trade. It hasn't worked against you, which is what we want to see.
Yeah. On the effective spread point, at what point do you think it would be worth looking at adjacent strikes and just decided to close the position and reopen where there's buyers?
Yeah, actually, good point. Let's go to the market info page. So this is the 2981. So we can look at the options chain and look at the neighbors of that strike if you want. Currently, oh yeah, it's your portfolio as well. So this is good. 2981 or 2981 here. So the column you want to look at is the Vega or this time scale. This is 1 month for most, some weekly, some daily. But time scale is the width or the risk per, like how often you have to manage this. The delta is back to this initial kind of assumption is the probability of being right or probability of being wrong. I mean, so in that case, you have 70 delta. So you have some extent 30% of being right, 70% of being wrong, but you're very bullish, so that's certainly fine. The VGORD is what you want to see. So if you look carefully, there's 1.00 for many of them. And this one might be a bit too far, this one too. On the way up, there might be another one, but it's a higher strike, higher delta. So it turns out that I skipped this one because this is a yearly, 1 year option. And there's a few traders, but as of 1 month, there's not much more you can do. So as a somewhat directional trader that is mostly looking for opportunities about price movement, you have done the best you can, and no one is buying, which is maybe this is called call skew. So people are buying the call side a bit more than the put side. In that case, there's not much you can do. You can move maybe to a lower strike, but it might not kind of reflect your bullish assumption. So it's fine if you're just trading that one strike. Anyone that comes in could also redirect or buy this, and you can buy and sell at the same time to create different type of trades. But yeah. The people don't want to buy puts. Maybe everyone is bullish anyways. So unless you're bearish yourself, there's no way. That again, that reflects the market conditions for sure.
Yeah. I mean, looking at this table, if I'm bullish at 2,900, I'm even more bullish at 2,700. So my logic would be to go for that kind of juicier Vagoid and move down there.
That's true. And you have 2x here. The open interest is not too big, and I'm sure there's going to be a few. It's not too bad. A few positions. That could be another way to roll. You would roll the strike down. So the price went down, you roll down, you kind of realize these losses. So technically, even you made profits because of the fees, but directionally you were a bit wrong. But yes, if you were to sell to the 2,700, this one has a ton of buying power and trade activity. This is so cool. But 10-ish positions on that strike here.
Yeah.
Lots of selling. So even though it's 8% more, you could certainly have a similar sized and kind of maybe earn more than 1.00. But it's definitely lower. You had 2,900, you would be $300 lower.
Yeah. And I'd be capping my upside a little more.
Exactly. And then we can look. The payoff of that position here will be a lot more muted. Yes.
Yeah.
The slope, and this person, they were definitely wrong. It was at 3,000 when they opened it. Now it went down. They're still in the green, which is the fees working for them. But they definitely also want to see the price going up. So
we did get to roast somebody in the end.
What's that?
So we did get to roast somebody in the end.
Yeah, exactly. So I think that's the account that we looked last time. But sometimes you have multiple offsetting positions. If you go back here in that specific strike, you can recognize they have a couple of positions open, some buying, some selling. The buying is, in a weird way, these weird looking ones. So this is a defined risk strategy. So even though they seem to be buying puts, they don't want to lose too much. So they are kind of defining their risk. They are probably neutral to bearish, and there's a trade for that is kind of defined risk. So that's where the buying pressure comes from. The call side definitely has more activity. Some of these red numbers, 3x the fees on Uniswap. Here 1.75x. this is a huge, like a lot of people are trading this one, and it's kind of liquid too. So 75% more on Uniswap. I'll take this any day of the week. Uh, this one has one ETH of open interest, so it's not much. But this one seems good. So it's all about your directional assumption. A lot of folks seem to be bullish buying call options. If you're selling a call option, you're exposed to unlimited losses. It's all a trade off. So overall, again, back to Steve's position, I think it's a pretty good place to be in. Oh, yes. I think the current market is fairly. Is this your position? Yeah, let me go back to that. Your portfolio. The current market is working for you as right. Just wait. You can imagine maybe opening up a new position as well, increasing your potential revenues, or maybe capping your risk. You can be bullish long term, but then bearish or neutral medium term. There's a few things that we can do. So maybe we just to keep it maybe other 30 minutes. So Steve has had a position in ETHUSDC, doing exactly what it should. He's making money. Nobody went broke making money, so that's fine. The price moved, you're making more now. There might be a spike in price as we speak.
Oh, nice.
Maybe not.
We caused it.
Yeah, exactly. So one position, ETHUSDC, a very, very stable pair if you want. People expect it's very liquid. That's one trade. You are also maybe looking at a different trade as well. That is a little bit more on the meme side. So which one did cut your attention?
Yeah, well, so I'm a long-time MOG fan, and I have resisted LPing my MOG because I've been holding, and I figured, okay, this might take a while to really take off, and I've been searching for yield, but I don't want to LP it because I don't want to lose some of my upside exposure, right, and possibly get swapped back into ETH on the way up. So I'm interested in something that could solve that.
A big MOG believer, you don't want to part your bags. You may want to harvest more yield in terms of MOG, maybe more ETH as well. This is also some situation that a lot of folks, maybe you found a good coin, you are holding a lot of it or just a little bit of it, but you don't want to sell it right away. Options and these type of trades are definitely one way to do this. So MOG, there's one pool that exists. It's high IV. So this is good and bad, but for options traders, you want to see kind of high IV. 165 is very, very high. The liquidity is also inefficiently deployed in Uniswap.
Yeah.
You would be kind of in a good place, even though the TVL on Uniswap is 5 million. There's only, I'm sure, like less than 100K worth of liquidity in place. So that's kind of where it's a good place to be capitalizing on this high IV. You are kind of playing in a way that you can own a lot of that, the fees that are earned every day. Again, doesn't look like much, but 700 on 100K, 0.1% per day, you can actually get a pretty juicy yield. And if you concentrate even more on that. So the one thing you should do is look at the liquidity in Uniswap. You don't see no liquidity. You see people actively moving back and forth. This is kind of in range. So this is a good, healthy pool in terms of liquidity. There's nothing yet on the Panoptic side. So we can someone has deployed this. So we can simply go to that trade page and talk about a couple of trades. So you mentioned you have some MOG. You would be depositing the MOG in Panoptic and use that as collateral to trade. That's correct?
Exactly.
And if you're doing this, you're the first one, so there's not a lot you can do, but you can sell options as much as you want. Now, if you're wanting to sell your MOG, there's one type of trade, but you said you want to keep some of it, right?
That's what I'm looking to do, but for the right amount of yield, I could be swayed.
Okay, but you still think the price is going to go up?
I do, yeah.
Okay, because you can go on the bullish side of the trades. We can't really buy options, so there's only short put. That is one way to trade. We can also look at the neutral side, and I'll show one example. But the neutral also could be a bit bullish as well, and a bit different. But in that case, if you were to just sell a put option, you would normally say, I think the price is going to go up. The delta that you want to sell at, which is what we did in the ticker Bitcoin, is about 30. And that price means that if MOG goes up, you are in this case selling on the way up, which is not what you want, but you make money on the way up, and you can earn. Yeah, this is a weird number, but you can earn some fees in terms of ETH. You can swap back to MOG to buy it again, or at least that trade is definitely bullish, but a little bit less kind of capitalizing on the fact that you can earn. So if you want to just capitalize on price, you can have the MOG be sold on the way up. If you want to be a bit more neutral and not part ways with your MOG, you can harvest the volatility, which is pretty high. And in that case, you could do a delta neutral strike, which is capitalizing on the pricing range bound, but because the IV is so high, you can earn a lot. And this is delta neutral. You don't think it's going to go up or down, but you can move this a little bit and still be in the positive delta realm. And it's all about the range that you think, but you can imagine that this trade does increase in value if the price goes up 50%. And the top is still bullish in terms of the max yield you get from that price move is 50% up. You earn fees during that time. And if it stays and ends here, you would get most of your coins back. You would be depositing some MOG, depositing some ETH. Price moves, you get the amount that's similar plus more given the fees. And you could still swap back your ETH for MOG or just kind of use this as a way to earn income. And in that case, you have what appears to be a delta neutrals trade, but because of the positioning, you can be bullish on that trade.
I like that. That makes sense. And the slope on the downside also looks like not too scary, honestly. So I can also react, have my alerts set up and close the position if it's really looking like it's going poorly.
And the key point is that if the price going down, you would be owning 100% MOG. And this is what your starting point is anyways, right?
Yeah.
So in reality, it's a bit more complex to show, and we don't want to confuse users, but you have the deposit balance as well that comes into play. So here you start with, I don't know, 1 billion MOG. I don't know what the price is. 1 billion MOG. If it goes up, you diversify some of this into ETH. You have maybe 900,000 MOG, but then you have 100 million MOG, a bunch of ETH and MOG in addition. So this is kind of the region you want to be in. But if it goes down, you're back to being holding that MOG. So in reality, it's mostly like a flat. That without confusing, but it's also part of the calculus. You start with some MOG. Happy to see some yield on the way up. You don't think it's gonna shoot so high that you'll sell all of it, but you can still kind of capture this. So the same way we had a Bitcoin that seemed to be also a particular Bitcoin trade that was a bit more delta neutral, you can still have by offsetting it some bullishness to it.
Yeah, I love that strategy. And I do think because we got to $1 billion market cap shortly before that Coinbase announcement, and I wanted to hold. I wanted to see to 5 billion, and we didn't. And now we're back to 300 million. So I do think like any moves from here are going to be a little more muted. I don't think we're going to see like a 10x.
Interesting. Yeah. So we didn't look at the price either, but yeah, I constructed these trades just from Steve's assumption, and what the price is doing can help a little bit. But if you're kind of holding your assumptions right, you can have something that's fairly good. So again, maybe the price has gone down. Time for a reversal. It's been somewhat stable. And I can imagine if the lowest price was kind of today and you can think it's going to go up, it's a good bet to be positioning yourself this way. So, but at the end of the day, whether you have MOG or meme coins or any coins that is just sitting in your account, you can diversify and generate yield out of those. And you don't want to sell outright. You want to hold some of this. You can do this with maybe half of your portfolio, but you'll diversify it into ETH as the price moves. So it's just a way to generate revenues without having to sell your coins. And because you take some risks, price going to go up, go down. This in a weird way makes you lose money if the price moons. So you have to be careful as well. But if you still have this kind of time scale, you don't think it's going to moon within 1 week or 1 day or even 1 month, there is a way to kind of diversify and harvest volatility, harvest ETH out of that trade.
I love that. It's exactly what I need.
Okay, perfect. So you could be the whale, the MOG whale in that pool. Again, that's the beauty of Panoptic. You can do this with any pair. If there's a Uniswap pool, you can do this now V4, V3 on Unichain as well. We'll kind of expand on all layer twos. But yeah, so I think that's the two trades. One that is managed, Steve has been managed well, nothing to do. another one, the meme coin that maybe Steve will do, but that could be kind of where he expresses his opinion on the price move of Mog. And yeah, we didn't have time to roast another account, but again, Steve, thanks for showing up, and then we can go over that. So yeah, so maybe where will you be this week, Steve? Maybe you can plug some of our upcoming events there.
Totally. Yeah. I'm going to be in Denver with the whole Panoptic team. So we have a really exciting event on Friday where we're going to have some interesting speakers, including Guillaume, giving a lot of interesting knowledge like you guys all just heard, but probably diving even a little deeper into some of the technical financial questions that you guys may have. So I'm very excited to learn from that. And then on my own end, me and, some of my collaborators like Henry and Louise will be around and eager to talk about the tech we've built. So if you have any questions on like, hey, like I want to build an alternative interface for Panoptic, I want to build a bot on Panoptic, like we love jamming on that kind of thing. So please come up to us and talk to us.
Amazing. Yeah. So the you can look on our Twitter for the event detail for Panopticon, which is our side event at eThenver. We'll have some time at the Unichain booth. So the Uniswap team was extremely gracious to allow us to speak to our users that are on Unichain and have us be featured. We'll do it on, I think, Saturday and Thursday as well. So pay attention. And again, we'll be roaming around the place, going to side events, main events. I'm excited as well. So eThenver is where all of this started for me too. First talk I gave was in 2022. But yes, I'm here. Happy to be back for the third year in a row. And yeah, feel free to reach out. Could be DMs, could be on Twitter. I'll be happy to meet you guys. And if you have any questions, always, we're happy to answer them. And I didn't say it earlier, nothing here is financial advice. Use your brain. We don't want to have you trade on options in a way that you're not prepared. So this is all about informational purposes. Nothing here is trading advice. And yeah, that's the disclosures. All right. So any last word otherwise, Steve?
No, I'm just really excited for eThenver. Like you said, it was a huge part of your journey, a huge part of mine too. And I love meeting people and learning what they're working on. So please come up and, introduce yourself.
Amazing. All right. That's a wrap. And thanks everyone for joining. And I'll see you tomorrow. We have a research live stream. Wednesday, we'll see. I'm traveling and the team as well is moving to Denver, but maybe we'll be back on Friday. We'll see. But yeah, otherwise, nice meeting you guys.